Hello, I'm Mario Toneguzzi, co-editor-in-chief of Retail Insider. Joining me today is Bruce Winder, retail analyst and expert and author in Canada. Thanks, Bruce, for joining us today.
Yeah, thanks for having me on, Mario.
Okay, we're going to talk about Aritzia and Group Dynamite. Now, I've been watching these two retailers. Well, Group Dynamite has Garage and Dynamite, but these retailers' financial results for the most recent quarters, and they're nothing but spectacular. And tell me what's happening and why are these two companies doing so well?
Yeah, it's quite breathtaking when you think about the financial results. I mean, normally if a retailer has, financial results growing, low to mid single digit, it's a great day. But these folks are growing, strong double digit, 30, 40, 50% in some cases. And they've also expanded margins too. And it's a bit of a different story depending on which one you look at, but there are some commonalities. I mean, Aritzia has really taken advantage of, I think, being underdeveloped in the United States, in the US market. They've done a great job of expanding their footprint in the US carefully, and really becoming, a main brand there, a real sort of affordable luxury brand. They seem to be somewhat insulated from some of the economic headwinds that we're reading about as well. They're sort of above maybe the consumer that is really struggling right now. They're appealing more to consumers who have money. And they've done a great job with their digital as well. Their digital's been fantastic. Their digital growth's been great. Their inventory management has been great. Their design has been fantastic. The consumer really likes their spring designs. So they kind of hit it out of the park. They kind of hit it on all cylinders right now. In terms of Group Dynamite Garage, they've done some really good things too. And they've been around a while, but they found a formula where they've started to elevate their brand and also elevate their real estate strategy. So they're going into more marquee locations, more affluent locations, while at the same time sort of upscaling some of their assortments and charging a little more. And similar to Aritzia, they've been able to hit a sweet spot of a consumer who has cash, sort of
Mm.
above some of the, fast fashion below them. And they've got some incredible results based on elevating their assortment, elevating their prices, elevating their real estate strategy. Their margin has expanded. So both companies have done remarkably well.
Yeah. So then when you look at what they're doing, it just seems to go against the flow, right? And you talk about the consumers these days are everywhere I turn, I see a report on, people in financial stress, and and yet you see this, and is that the key, I guess, for retails? You got to know who your customer base is and focus on them as opposed to focusing on everybody.
Think that's a great point. I mean, I would argue that both Aritzia and Group Dynamite have been very specific about who they're going after. Sort of an affluent person, a younger female who's affluent, who has some money and is willing to spend money, and sort of marketing in parts of town where people are affluent, so those that are. So they really carved out, I wouldn't say it's a niche, but a really nice segment of the market that is somewhat immune to some of the downturns that you and I have talked about. They're not fighting it out at the lower end price points. They're targeting folks who have money, who have a good job, who want affordable luxury, who are willing to pay premium for a nice garment. They're below the super luxury folks for sure, but there's a nice there that seems to be insulated from some of the economic headwinds we've heard about.
Yeah. Now the other thing too is with them that they're kind of I hate to use the word like hip, but they've got a good like appeal to both those retailers, right? And how do you develop that?
Yeah, it's a great one, and it's a secret formula that a lot of companies don't seem to be able to get. But you really have. It's all about doing things that are relevant to your specific consumer group and not letting them down. When I say not letting them down, I mean having the right quality, having the right price, having the right communications, having the right store in stock. These are all the things that they're doing right. And if you continuously do that in a way that's better than your competition, your customers are going to be very loyal to you. And that's what we're seeing. We're seeing really good loyalty with both brands.
Mm.
And the other thing I forgot to mention about Group Dynamite is they've expanded also. They've got
Yeah.
some new stores in the UK which have done well, and the US they've got a new Flatiron flagship coming for Garage in New York. So both companies have done international so far. That's another big piece. And you can sort of juxtapose that with Lululemon, who sort of has been like that in the past, but has fallen on harder times where they're not firing on all cylinders. They're missing some of those pieces that we talked about earlier as it relates to quality in stock, appeal of their garments and their programs in the spring. So hopefully Lulu can go back to where they were and sort of be a little more like the new Lulus, which are really Aritzia and Garage Dynamite as well.
All right. Well, thanks, Bruce, for joining us today.
Yeah, thanks, Mario. Take care.
Okay, that was Bruce Winder, who is a retail analyst and author. I'm Mario Toneguzzi, co-editor in chief with Retail Insider. Thanks for joining us today.